Good afternoon, and welcome to the end of week market review for Friday, March 7th, 2014. You are going to notice that our US markets are flat bullish, while our Canadian markets are down into a declining bullish sentiment. You're going to see that the markets did end the week up, but because of the slow trading sessions over the last couple of days, we did end up seeing that MACD flatten out. The Dow Jones is up 0.19% on the day, while the S&P 500 is only up 0.05%. We do have a decline in our precious metals, with gold down 0.91% and silver down 0.21%. Oil did work itself up 1.11%. Looking at the economic reports, the one that we specifically want to look at is for March 6th, where we're looking at the jobless claims. You're going to see that they were expecting 335,000 filings, but they actually ended up with 323 because they had fewer than expected. That was one thing that helped fuel the markets back up into a positive trend. This was in contrast to the negativity that's been playing at the markets because of Ukraine. So here we are looking at the S&P 500 on the daily chart. You're going to see that it is slowly working itself up into all-time highs, but it is flattening out, causing that MACD to slow down. The black line is flat, but still above the blue line. Looking at the S&P 500 on the weekly chart, you're going to see that it definitely was a good, strong, healthy week all in all. We don't need to be concerned with that in the slightest. Obviously, it's possible that we could end up having pullbacks down to the 26 EMA. That's been common sight throughout the last year, but it definitely doesn't mean that it ruins the trend. The Toronto Stock Exchange is flattening out much more so, though the MACD has flattened down and then even turned into a declining bullish. The black line is below the blue line and having troubles getting back above it. It is still trading above its support level though. While looking at the TSX on the weekly chart, you're going to see that it too is well into its highs with plenty of room down to its 26 EMA. If we pull down that far, we definitely would end up seeing the markets get into a declining bearish state. But again, we have seen this happen in the past. We wouldn't need to be too concerned with that. Our volatility indicator is still below the 200 EMA. That's obviously something that we're really looking for because the lower the volatility, the less chance of any large trades happening in the markets. Now that means good or bad. All in all, we like some nice consistency with just a little bit of volatility. So right now with it in the 14s, that's certainly more than what we're looking for. If you have any questions about anything that we've discussed, you can either send us an email or phone call. All of our contact information is on the screen. So with that said, this has been the end of week market review for Friday, March 7th, 2014. Ciao for now.